Hello and welcome to the Financial Future Guide. I'm your guy and I'm your guide. My name is Alex and today we're looking at the economic news that Canada has seen in the last month. Today is October the 14th, 2020. As some of you know, I do this once a month and just give a rundown of things that I'm seeing in the economy and break down some of the latest statistics. But as usual, I like to keep it short and sweet, so let's get right into it. In the last week, some important news, important findings have come out, and today we'll be focusing on the housing starts, the employment change, and the unemployment rate. First, looking at jobs and employment, the Canadian economy created 378,000 jobs in September of 2020. This was significantly above the forecast of 150,000. Employment is now sitting 3.7% below its pre-pandemic level in February, and it's also very strong news to note that the number of Canadians who were employed but work less than half of their usual hours for reasons likely related to COVID, fell by 108,000, which meant that they were down 7.1% in September. So with this information, it's not too surprising that the unemployment rate in Canada dropped to 9% in September of 2020, down from the previous 10.2% in August. This is very positive to see that the jobless rate fell for the fourth consecutive month, and we have regained a significant amount of jobs since we peaked at an all-time high of 13.7% unemployment. Now, although this is great to see, if we're looking back at late 2019, early 2020, we were sitting anywhere between the 5.5 to 6 range, so there still is a large way to go. Another important economic factor to look at is the new homes. In a strong economy, people are more likely to purchase new homes. Conversely, people are less likely to buy new homes in a weak economy. And for this reason, I find it important to look at the housing starts in Canada. Now, the housing starts fell 20.1% from the previous month, with just under 209,000 units in September. We were expecting to see this come in at about 240,000 units, so we did miss the expectation. However, if we look a little further back at this graph, we can see that in late 2019, early 2020, they were sitting around this 210,000 unit mark. And then obviously in the last few months, we have made up some of those losses and construction projects that were postponed due to the pandemic. So although this didn't come in as high as the market expected, I'm not too alarmed with the results from the housing starts. Checking out the Canadian dollar in comparison to the US dollar, over the last month we've been fairly steady, dipping throughout September, but now we're back where we started about a month ago. Flicking over to some of the headlines that we've seen over the last month, Canada's GDP grew by 3% in July, and yes, I am aware that it is now September. However, these GDP statistics do lag behind a little and have only come to light within the last few weeks. If we look at Canada's GDP across all industries, it does appear that Canada's gross domestic product has experienced a V-bottom recovery to this date, and we are now creeping well above the $1850 billion mark. Although the CERB program has finished, it's important to note that the Canadian government is supporting their people, which obviously provides some sort of economic stimulus. It is starting to get a little bit colder now, so winter is coming, and with the cold, we will need the heat. As many who follow the market would know, the energy sector has been beaten up over the last few months, with both the lack of demand due to the pandemic and also a huge increase in supply due to the Saudi Arabian and Russian price war. Next up is a very interesting one. The global watchdogs propose tax overhaul for big tech. By global watchdog, they're referring to OECD, which is the Organization for Economic Cooperation and Development. This is a group that advises the world's top economies and have been putting together a global tax overhaul framework. This is expected to be presented to a group of 20 finance ministers later this week and could be implemented as early as mid-2021 if an agreement is reached. The OECD has been trying to find a compromise on digital taxes that involves more than 135 countries. Many countries have been upset by the way that digital giants like Amazon and Google use different methods to avoid paying tax in certain countries. The end goal is to ensure that these multinational corporations pay taxes even in places where they do business remotely. Next up is Air Canada, a Canadian favorite, which agrees to still take over air transit in their acquisition deal, but they will be paying over 70% less than they first agreed to. Obviously, with many countries locked down and not allowing international travel, the airline and travel industry has been absolutely devastated. This allows for larger companies such as Air Canada to purchase some of their smaller rivals. I'm personally not a big fan of airline stocks, not only for the reason that I think the industry's recovery will take a long time, but also because I believe it's a very price-focused industry. I believe that the majority of people will purchase a flight based on price versus based on the value, and therefore brand loyalty is very low. At the end of the day, I believe most people just want to get from A to B quickly with decent service at a fair price. Next up is the American company Disney, who will lay off 28,000 theme park workers. This shouldn't really surprise anyone due to these parks running at a significantly lower capacity than usual. They simply cannot afford to keep their staff on anymore. Do I think many of these jobs may return? Yes, in the long term, but for the short term, this was definitely the right move for Disney to ensure the long-term success of the company. Another large company, mall operator Brookfield Properties, is laying off 20% of their retail staff. The retail industry was another one that was hit fairly hard, as many stores were considered non-essential retailers and therefore had to close or significantly reduce the amount of people within their stores over the last few months. So although you see companies like Brookfield and Disney laying off a lot of people, it is important to note that these companies made the conscious decision to keep all of their team employed while they gained a better understanding of the long-term impact of the pandemic on their particular company. As shown in the huge spike in the unemployment rate in March, April, and May, it is evident that many companies got rid of their employees early and quickly. So although it is hard that many are losing their jobs due to this, it's great to see that some large companies did their best to hold on to employees for a period of time. Now that's all for this month's news and data recap. Remember to like, comment, and subscribe to see videos similar to this one.